In a remarkable turn of events, stocks staged a significant comeback during the Thanksgiving week, marking their best performance since 2008. Investors who navigated a rocky month for the markets found solace in the promising numbers that emerged from the shortened week of trading. The S&P 500 and the Dow Jones Industrial Average saw gains of 3.7% and 3.2% respectively, highlighting a renewed sense of optimism on Wall Street. As the dust settles and we look ahead, what might December bring? Historically, strong performances during Thanksgiving week have set the stage for further gains in December, and this year appears to follow suit. Since 1950, data shows that whenever the S&P 500 has increased by 2% or more during Thanksgiving week, the index has continued its climb in December over 80% of the time. The expected market behavior gives investors reasons to be hopeful about a continuation of the upward trend, especially as we approach the year's end. With the backdrop of rising stock prices, there is also a growing sense of optimism regarding potential changes in monetary policy. Wall Street is increasingly confident about the likelihood of a Federal Reserve rate cut at their upcoming December meeting. The CME Group's data indicated that futures traders were pricing in an impressive 87% chance of this rate cut, which could further stimulate market activity and investor confidence. Chris Larkin, a managing director of trading and investing at E-Trade from Morgan Stanley, described the stock market's narrative in November as one of better late than never. After facing a challenging month, the S&P 500 rebounded remarkably, closing just shy of its record high. November, which had begun with significant volatility, saw the index rally from a near 10-week low, demonstrating the resilience of the market. However, the roller coaster ride of the market in November was not solely about interest rates. Investors were also contending with jitters about the state of artificial intelligence. This segment of the market has been subject to intense scrutiny. The concerns surrounding AI affected even major players, with NVIDIA's earnings failing to convince market analysts of a robust future outlook. In contrast, Alphabet's shares soared following the introduction of Gemini 3, its latest large language model, which has been heralded by analysts as a significant advancement in AI capabilities. Michael O'Rourke, the chief market strategist at Jones Trading, noted the bifurcation within the AI trade. Companies like Alphabet and Broadcom have thrived in recent weeks, resonating with investors' confidence, while NVIDIA, the tech giant closely associated with AI, saw its stock lag behind. This divergence raises questions about the future of the AI sector and which firms will ultimately emerge as leaders. The tensions in the tech market were reflected in the Nasdaq Composite, which fell by 1.5% in November, snapping a 7-month winning streak. This drop marked its largest monthly decrease since March, indicating a shift in investor sentiment. Meanwhile, the small-cap Russell 2000 enjoyed a contrast in fortunes, gaining 5.5% in the same week, which represented its best weekly performance since November 2024. As the market looks towards December, many analysts emphasize the historical significance of this month for stock performance. December has a reputation as a strong month for stocks, often characterized by a holiday-driven rally. Investors will certainly be watching closely, especially with the additional factor of interest rates potentially shifting in their favor. Monetary policy plays an essential role in shaping market conditions, and a rate cut could invigorate both consumer spending and business investment, propelling stocks even higher. Furthermore, this year's strong Thanksgiving showing, coupled with historical trends, suggests that the markets could continue to thrive in December. Investors are encouraged to keep a keen eye on economic indicators and Federal Reserve communications, as these will likely provide clues about the future trajectory of the market. The interplay between interest rates, economic data, and corporate earnings will be pivotal as we enter the final month of the year. Additionally, the evolving dynamics within the tech sector demand attention. As various companies navigate their positions in the AI race, shifts in leadership may occur, impacting investor strategies and allocations. The contrast between companies that adapt successfully versus those that struggle with innovation will shape the market landscape in the coming months. As we chart our course into December, the undeniable energy in the market is palpable. With the Federal Reserve in the spotlight and a historically favorable month on the horizon, investors are poised to capitalize on opportunities. While caution may still linger due to uncertainties surrounding tech stocks and global economic conditions, the positive momentum from Thanksgiving week provides a platform for further gains. December could very well be a month where investors capitalize on both the holiday spirit and favorable equity conditions, culminating in a prosperous conclusion to the year. Ultimately, while the stock market's ebb and flow will continue, the possibility of a strong December following a robust Thanksgiving week remains tantalizingly close. Investors should prepare for a month of potential highs, guided by economic data, interest rates, and the performance of key tech companies that continue to innovate and adapt in a rapidly changing landscape.